If I placed $10,000 in cash on the table right now and asked you what you would do with it, what would your answer be? Buy the newest Apple Vision Pro, book a trip to Bali, or, perhaps more realistically, use it to pay off some credit card debt or throw it into a low-interest savings account? Most people think of $10,000 as money to spend or to save. But what if I told you that's the wrong way to think about it? Especially for men who are in the prime of their working years, where every financial decision we make doesn't just affect ourselves, but also shapes the future of the people we love. The truth is, $10,000 is not a lottery ticket, and it's not a bonus. See it instead as the first stroke in designing your own financial blueprint, not just to build wealth, but to protect it, to withstand economic storms, and to give you something far more valuable: peace of mind. In this video, I won't just show you how to invest $10,000. I'll share with you a proven strategy to start building a strong, sustainable financial foundation, beginning in 2026. This isn't about getting rich quickly, it's about building wealth that lasts. Let's get started. The investor's mindset. Before we talk about buying VTI or SCHD, we need to change the way we think. Stop thinking like a stock trader and start thinking like an architect or a general, building an unshakable fortress. A sustainable financial strategy always requires a blueprint, patience, and long-term vision. A great general doesn't panic when he hears rumors of an approaching enemy army. He trusts the plan he's drawn and the walls he's built with his own hands. Likewise, a wise investor doesn't sell off his stocks just because of a negative headline. He doesn't try to buy the dip and sell the top, a game even Wall Street legends often lose. Instead, he focuses on buying the right assets and holding them long enough. He builds his financial fortress brick by brick, methodically, patiently, without emotion. So, what does the blueprint for our $10,000 fortress look like? It's built on 5 core pillars. Let's dive into each one. How to allocate $10,000 effectively. Part 1. The unshakable financial pillar. $4,000 40%. Every great structure must begin with a solid foundation. A fortress built on sand will crumble in the first storm. In the world of investing, that foundation is made of broad market ETFs, the bedrock of long-term stability. With the first $4,000, we'll build this core pillar. My choices are funds like VTI, Vanguard Total Stock Market ETF, or VOO, Vanguard S&P 500 ETF. Why? Because when you buy VTI, you're not buying one company, you're owning a piece of nearly 4,000 of America's best businesses. You're betting on the entire economy, from Apple and Microsoft to industries you've never heard of. It's diversification at its best. This foundation may wobble in the short term, but over time, it rises with human progress. Boring? Yes. Slow? Maybe. But it's the base that keeps your financial blueprint standing strong for decades. Part 2. The steady support pillar. $2,000, 20%. Once we've built the main pillar, we need solid supports, the parts that keep everything balanced. These aren't built for speed, but for strength when markets shake. In our portfolio, they're the value and dividend-paying giants that have endured countless economic cycles, generating steady cash flow and rewarding investors year after year. With the next $2,000, we'll invest in funds focused on dividends and value, such as SCHD, Schwab US, Dividend Equity ETF, or VYM, Vanguard High Dividend Yield ETF. Think of it this way. Companies in SCHD, like Coca-Cola, Pepsi, or Johnson & Johnson, are the support beams of your financial structure. No matter how tough the economy gets, people still drink Coke, need medicine, and buy essentials. And the best part? They pay you to own them through dividends, steady streams that quietly flow back, helping you reinvest and keep your system strong even when the market shakes. Part 3. The Growth and Innovation Block. $2,000, 20%. A blueprint built only for defense will soon become outdated. You need rising blocks, the parts that reach higher, see further, and capture new trends before everyone else. This is your growth and innovation block, where you invest in the future, technology, AI, healthcare, and more. It's not just what drives growth, but what expands your vision in a changing world. This $2,000 is your investment in the future. We'll allocate it to funds focused on technology, innovation, and industries shaping the next 10-20 years. Top choices include QQQM, Invesco, Nasdaq 100 ETF, and VUG, Vanguard Growth ETF. These funds include innovators like NVIDIA, Amazon, and Meta, leaders in AI, cloud computing, and biotech. We're not betting on one winner, but on the entire ecosystem driving the future. This block may swing more than others, but it's the one that gives your financial blueprint the power to grow higher and faster in the years ahead. Part 4. The Strategic Risk Block. $1,000, 10%. In every solid blueprint, there's always a space reserved for breakthroughs, the area where higher risk comes with the potential for higher rewards. This is the controlled risk portion of your portfolio. With this $1,000, you can add a bit of spice to the mix, perhaps a semiconductor ETF like SMH, a high-tech fund like VGT, or even a small allocation to Bitcoin. These are the energy lines that can supercharge your financial blueprint when the market moves in your favor. But there's one key rule: never go over 10%. This is your experiment, not your foundation. If it fails, you're safe, but if it works, it can supercharge your path to wealth. Be bold, but stay grounded. Part 5. The Strategic Reserve Fund. $1,000, 10%. A strong blueprint doesn't just rely on pillars and growth blocks, it also needs a safety cushion. In investing, that cushion is cash or highly liquid assets. With the final $1,000, we don't invest, we wait. This portion should be kept in a high-yield savings account or a short-term government bond fund like SGOV, safe, steady, and quietly earning interest. This isn't idle money, it's fuel for opportunity. When the market turns volatile and panic sets in, you'll be the one holding the dry powder, ready to buy great assets at a discount. Big opportunities rarely come from explosive moments. They come from patience and preparation. You now have your own financial blueprint, with the pillar, the support beam, the growth block, the venture piece, and the strategic reserve. So the question is, how do you start building it? If you're in the United States, begin with a Roth IRA, one of the most powerful wealth-building tools the government allows. Your investments grow tax-free, and trusted platforms like Fidelity, Charles Schwab, or Vanguard are excellent places to get started. And most importantly, automate your investing. Set up a recurring monthly contribution. Don't try to time the market. No one can do that consistently. Building wealth isn't a leap. It's a steady process of laying bricks, month after month. Time in the market always matters far more than timing the market. Common mistakes to avoid. When you start building, beware of 3 classic traps that most new investors fall into. Putting all your money into one hot pick just because someone told you to. That's not building a foundation. That's erecting a fragile structure that can collapse with the first strong wind. Falling into the FOMO or the fear of missing out trap. You see others bragging about their profits, so you chase after the trend. Then, when the market drops, you panic and sell at the bottom. That's the fastest way to destroy the blueprint you've worked so hard to create. Waiting for the perfect crash to buy in. Many have been waiting since 2020, 2021, and they've missed one of the strongest growth periods in history. The market doesn't reward hesitation, it rewards those who start today. The power of time and compounding. So what's the ultimate reward of building a strong financial blueprint? It's not just about the numbers. Sure, your $10,000, with the power of compounding, could grow into $60,000, $160,000, or even more over the next 20 to 30 years. But the true reward goes far beyond that. It's the peace of mind that comes from knowing that no matter what tomorrow brings, no matter how the markets move, your family's financial future is protected by a solid foundation you've built with your own hands. It's the clarity and confidence in every decision you make. You're no longer swayed by fear or hype because you're following a blueprint, a strategy. And most importantly, it's freedom. The freedom to retire early, to start doing work you're passionate about, to spend more time with your loved ones. A strong financial blueprint doesn't just shield you from risk, it becomes the launchpad for your biggest dreams. Investing is not a game of luck. It's a journey of mindset, discipline, and time. The $10,000 you have today isn't the destination, it's the very first stroke in the blueprint of your financial future. If you found this video helpful, don't forget to hit the like button and subscribe to the channel. Thank you for watching.